In progress.
Okay. Hello, everyone. Man, we're going to talk about one of the most important things in trading. And one of the things that, a lot of new traders or people that's been trading for like 1 to 5 years, they really don't understand this concept right here called risk versus reward. And, to really excel and be able to pay your bills and travel the world, this is probably the first thing you need to understand after, you got to have your mindset, after you know how to push the buttons. But this is a thing that like takes you from not making money to being able to make money and turn this into a business for you, so you can get out of your corporate America job, or you could sell your business that you already have and start making more money doing trading. So it's called risk versus reward. And what I'm going to kind of go over is never breach your account again. And that's a prop term. We could just trade with our regular money. I can show you guys how to do that. But most of the people in the academy, we're going to trade on a prop account like I do. There's a bank out of Florida that we partnered with, and you'll be able to use their money. The reason why you want to use their money is because you'll be able to make more money from just making, 1 to 10% a month on a prop account than you would if you would, make double or triple what you have on a regular account. So to me, it's genius because if you can make double or triple on on a regular money account, then that means you can make double or triple on a prop account, which means you're going to be making a whole lot of crazy money and be retired really fast if you could figure out how to do that. So a lot of people that give up on trading is because they start losing money on their real money, and then you can lose it really quick. But on a profit account, you're using the bank's money to where you're not going to lose that much money, and you have a higher chance of actually making money in a short term or long term scenario than if you're just using your own money. So once again, my name is a Beast Trader, and I live a freedom lifestyle. And what does that freedom lifestyle, allow you to do? Well, all of us could be beach traders. All of us could trade at the beach. I love the beach, so that's where I love to trade at. But you guys could trade in the wilderness or on a hiking trip. All you need is a phone and make sure you have enough reception. You could trade anywhere you want to at a park. You know, you could be whoever you want to be. The whole thing about the beast trader in this system that we have at this academy is that I want you guys to have a visualization of what you want to do when you're trading, and that's the freedom lifestyle that I have, and that I want everybody to have. It's not about being a billionaire, but it's about, number one is having the right mindset in life and be spiritually focused that, this world is temporal, and we're focused on the world after this, or heaven, or we don't want people to go to hell, so we want to help people out of that situation. So that's the number one thing in my life, is always to have a spiritual freedom, and to have my mental and my soul in the right place. And number two is financial freedom, to have enough money to do things you want to. I just came back from Puerto Rico. Last year I traveled so many places: Puerto Rico, Dubai, Tampa a couple times, Greece, Rome, Las Vegas all the time, Tulum, Cancun. I've been just so many places to name a few of the places because I forgot about some. That's why I take so many pictures. But I'm usually going to where there's really beautiful beaches. And that was one of the things at Puerto Rico. We got into a yacht, we rented a yacht, and we went out and had fun. We went to the number 4 beach in the world. It was the best beach that I ever really came across. There was great beaches in Greece, also in Santorini Island, but this beach was a little different. And it's usually those untapped places in the world that you have to go to. You have to take a boat there where there's not a lot of people, because there's a lot of great beaches, but when people, over populate the beach, and it doesn't look as nice as it should. There's trash and everything. So this was a very secluded place. And I want you guys to be able to travel and do things like that in secluded places. And then time freedom. If I just had enough money to go traveling, well, everybody can't travel. Most of the people that we've seen in Puerto Rico, me and my wife were very talkative, so we talked to a lot of people there. But most people were there for like 3 days, 5 days. We found one couple, it was their honeymoon, so they were there for 7 days. But they had to always come back to their job. They were always thinking about, oh man, Tuesday I got to go back. Wednesday I got, oh goodness. And so you want to have that time freedom to where you can go travel 9 days, or maybe you travel 2 weeks or 3 weeks, and you could just, because that takes a load off of you because it's like you're out of the real world. You're still in the real world, but you're just viewing the nature and viewing the things that, is leveling you, putting you back to the basics and giving you a better foundation. So those are the things that I want to teach you guys, those three things in life that I call the freedom lifestyle. So let's get right into risk versus reward. And so what are we going to learn? We're going to learn about how to calculate risk versus reward, risk divided by the reward, right? Number two is we're going to teach you about win-loss ratios. And win-loss ratios are really important in trading, but it's not the end all. That doesn't mean if you're a 90% trader, you're going to get rich, okay? Let me be honest with you. I have a friend that he's really a mentor to me, and he says I mentor him too, but I look like he's a mentor, and he trades at 30% win and 70% losses, but he's a millionaire from trading because he takes trades long when they're winning and he cuts short trades that are losing. And so then we're going to talk about the most important part of the risk versus reward is break even percentage. You need to know, where your stop loss take profit is. You got to know when you're going to break even, and whenever you break even, you need to go above and beyond that to actually win money on a long-term successful. And then I want to kind of teach you about understanding surge trader rules because I want you guys to be a part of that. So number one, risk versus reward. Risk is a total potential loss established by a stop loss order. It is the difference between the entry point for the trade and the stop loss. So when you get into a trade and you set a stop loss, that's saying like, okay, well, you're going to lose $200 if it goes the wrong way. So that's the ingredients of a stop loss is really powerful because you don't want the trade going radically in the wrong direction and you lose so much money. Sometimes you could lose on one trade what you made for the whole week. So you don't want that to happen to you over and over and over again because you're going to be losing accounts. So reward, think of the reward is the total potential profit established by a profit target. This is the point at which a trade is closed in profit. So a lot of the times when I trade, I put take profit, but it's way higher than I really want to get out at. but if I have to do something like I was on the plane, I took a trade and I put my stop or take profit real high. I couldn't get the internet, and then when I got off the plane, it like took the money for me at a higher than I would have got out way earlier. So that's why I do a take profit higher than I really want to get out because I really want to close in the profit at a certain percentage compared to the stop loss. So let's look. In isolation, it's better to take trades that have lower risk reward ratios. That means the profit potential outweighs the risk. And you guys have to understand that. The risk reward ratio doesn't need to be very low to work though. Trades with ratios between 1.0 are likely to produce better results than those with a risk ratio that is greater than 1.0. Well, what am I talking about? Let's go over an example. For example, if you buy gold, XAU USD at an entry point of 1,750 cents and then place a stop loss at 1698.50 and a profit target of 1703.5, the risk reward is what? How can we figure that out? Well, this is what you're going to do. You're going to take where it's at. You're going to take your stop loss. Then you're going to divide that by the same entry point and your take profit. And so what that's going to tell you is that your stop loss is $2 down. So you're willing to lose $2 in a trade. Well, we know what $2 of a trade is. If you're doing one lot, $2 is going to be $200. And so your take profit is at $3 up. So you're going to make $300. So if you lose $200. If you win, you make $300. Now that's going to be equal to a 0.67. And so this is the kind of strategy that you want. You want your take profit to be higher than your stop loss. Okay, because that means that you don't have to win all the time. And then you'll be in that quagmire. So let's go over the next point is the win-loss ratio, which is very important. And that's what I'm kind of based off of. I'm a 90% trader, but who cares if you're a 90% trader if you're losing, really big compared to what you're winning. So you got to be careful on win-loss. But the win is just wins divided by losses. That's the ratio. And the ratio is a total number of winning trades to the number of losing trades. You know, it's a basic math that all of us kind of got in school. It does not take into account how much was won or lost, though. So we're not talking about winning $900 and losing $100. That's not what we're talking about. We're talking about winning 9 trades in a row and losing 1 trade. That would be 90%, right? But if you win 9 trades in a row for $100, how much do you make? Well, 9 times 100 equals $900. Now, if that 1 trade that I lose $1,000, guess what? I'm losing money and I'm a 90% trader. So I won $900 off of winning 9 trades and I lost 1 trade and lost $1,000. That's not good. So if you're a 90% trader, if you could just say, well, I make $900 off of 9 trades, $100 each, but then I lose $200 every time I lose. That's what you need to be at. Even if it's double what you're winning, it's okay because your percentage of winning is higher than losing. You guys have to get this. You have to get this. What the win-loss ratio can tell you. The win-loss ratio is used mostly by day traders to access their daily wins and losses from trading. It is used with the win rate, that is the number of trades won out of total trades, to determine the probability of a trader's success. A win-loss ratio above 1 or a win-loss above 50% is usually favorable. So as long as you're winning more trades than you're losing, you can make money. Or as long as you're winning big trades and you're losing small trades, you could even have a win-loss record of like 20% or 30%. If you stay in the trade that you win way longer for way more money. Well, let me just explain to you just in your head. I'm not going to write it down, but I probably do have a scenario for you written down. But let's say you won, 2 trades for $1,000. Okay. And you lost 8 trades for $100. Every trade, those 8 trades, you lost $100. So you lost 8 times 100 is $800. But the 2 trades that you won $1,000 each time. So you won $2,000 and you lost $800. So you made $1,200. But you're a 20% win-loss record. See, that's what you guys have to understand. Most people want to get out of good trades and want to stay in trades that are bad longer. That's the opposite of what trading should be for master traders. People that really want to make money, they want to stay in the good trade because they're already in profit. And so they're not losing. So it should tell your mind, no, you don't want the $300 or $400 just because that's a little bit of money. You're already $300 and $400 up. You could even let it go down to where you only make $200. But how about if it keeps on going in the right direction? You could make $2,000, $3,000. You could be in a trade, for the whole week if it keeps on going up for the whole week. See, most people that are new, they're not going to do that because they're looking at the little bit of amount that they made. And then what happens is you stay in a bad trade for longer because you say, well, it's going to whip back around and I'm not going to lose that much. But we need to have a different mindset of staying in good trades and getting out of bad trades fast. So win-loss, remember, is just, how many trades you're taking are the ones that you won divided by the ones that you lost. And that's, so if you win 8 out of 10 trades, you're going to be an 80% win-loss ratio. The break-even is more important than both the things I just told you. So the trading break-even percentage is a useful trading statistic because it can quickly show how many trades you need to win. Using various stop losses, that's risk, and targets, take profits to break even. Breaking even means you neither make nor lose money. If you win more trades than the break-even percentage, your trading will produce a profit. If you win fewer trades than the break-even percentage, you will lose money trading. So what that means is, let's say that I want to make $100 every trade I win, and every trade I lose, I'm willing to lose $200, right? That means what? When would you break even? Well, if you lose 3 trades, okay, and you win 7, you win $700 because you're 7 times 100. And then I said you're going to lose 200 for every one you lose, and you lose 3 trades. So that means you lost $600. So you won 700, you lost 600. So you're up $100. What you're always trying to figure out is, When are you going to be over 50% so you can take money? At that situation, you're making $100. Is that a good strategy? No, it's not. Okay. Let's look at another one in our brain. Let's just say, you know, we win $100 because it's easy at times, right? And we win 5 trades and we lose 2 trades again, or 5 trades again for $200. We lost $1,000. 5 times 200 is 1,000, and we made what? $500. So if we're a 50% trader and we have that kind of stop loss and take profit, we're going to be losing money. So you have to always be in a situation to where you're making money. And the best way to kind of do that when you're a beginning trader is to risk as much as you're going to lose. So in that scenario, we would say we're going to win $100 or we're going to lose $100. And it's easy because you just set your stop loss, you know, $1 down, set your stop loss $1 up, and you're going to trade one lot. If it goes down the wrong way, you're going to lose 100. If it goes the right way, you win 100. Well, what does that mean? That means that you could be a 50% trader. It's like a flip of the coin, and you're going to break even. And hopefully, you know, you get one more than you lose, and now you're making money. So these are the kind of scenarios I want to teach you guys. And then you guys can really get into a situation to where you know how to make money through these strategies. So let's look right here. The break-even percentage is calculated using the target and stop loss settings for the trading strategy in question. The target and stop loss can be represented in ticks. That's in futures, and pips is what we're more concerned about because we're Forex. Or cents, if we're doing stocks, it's just telling you a number that's basically out there. Like on gold, we're going by, you know, the cents. And then to the dollar is going to be $100 if you're doing one lot. If you do 10 lots, then every time it goes up $100 or $1 or down $1, you're talking about $1,000. So you could basically, with gold, is very simple to break down how much, if it goes up or how much it goes down, how much it costs. Other ones, you're going to have to get used to them. Like Bitcoin is $27,000. So it's a little more complicated to know how much you're going to win on 1 pip or 100 pips and things like that. If you don't always use the same stop loss target on each trade, then use your average win and average loss over many trades. The average loss is equivalent to your average stop loss, and the average win is equivalent to your average target. So you guys should know how much you guys want to win, how much you guys are willing to lose each time, depending on, you know, how many lots you're using and how big your account is. This is what really matters. You know, the calculation is your stop loss and then divided by, and the target plus the stop loss times 100. And well, what does that look like? That looks like a hard math problems. I used to teach math in high school, so I understand this, but suppose you trade Forex and utilize $3 stop loss and a $6 take profit. Your break-even percentage is 33%. In other words, if your stop loss was at $3 where you could lose, but you want to win $6 every time, you need to win 33% of your trades for you to break even. So as long as you're a 33% trader, you know, you take 10 trades and you win at least 3 of them, then you're going to break even if you lose the 7 trades at that same price. Okay. That's all this really means. And so you guys have to figure out, you know, what kind of percentages you usually do. But if you're not that good at trading, you know, I had this one friend that said, man, I lose every trade. I said, great. Because all you got to do is trade the opposite of what you usually do, because you lose every time. What you don't want to be is somebody that wins half the time and loses half the time. That's a reckless disaster for you. You're probably not going to be making any money. Suppose you trade the same stock each day. Typically, you risk 0.08 per share and place a target of 0.22 per share. So we're talking about if you're trading on stocks and they're only open for part of the day. But, you know, that kind of level right there, it's almost 3 to 1. And so it would look like this. You would only have to win 26% of the time to make money, to break even. So these are the kind of things that you need to think about when you're trading, because you need to stay in the trade long enough. You need to have your point where, you know, I'm willing to lose $200, but I got to make $3 or $300 when it goes the right way. So you always need to know which way. Surge Trader. Let's go over a couple of the rules on Surge Trader, because some people don't understand them. But they're very kind of simple. And, for anybody that doesn't know who Surge Trader is, it's the account that we use. They're partnered. They're basically a bank. And we can go to Surge Trader itself, go to their website, and we can see stuff at their website. And in the back office, two of our academy, we go over all the stuff with Surge Trader. There's videos on it, how to look at things. But the first thing, you're going to get a link from one of the people that invited you, and you're going to use that link because that link ties you to our academy. And I have a relationship with the vice president of this company. So you always want to be tied in and not just one person. It's like with an academy, that's your advantage. So you start out with an account. If you want a $25,000 account, that's $250. $50,000 is $400. $100,000 is $700. $250,000 is $1,800. That's the most popular choice. Our academy, the most popular choice is $100,000 to start out with. Then you got the $500,000 for $3,500, or $1 million at $6,500. And there's kind of discount codes out there, and there's different options you could basically use. I say just start out regular on your first account. Start out $100 or $100,000, pay $700, and all you got to do is go up 10% before you go down 5%. So let's just look at this first phase video right here. They have a nice one. It's like a 1 minute long.
Welcome to Surge Trader, where profitable traders can capitalize on their skills and amplify their returns with a real money funded trader account. We built the Surge Trader program on 3 pillars. 1. Simple trading rules. 2. No time limits. And 3. Fast, responsive service. Here's how it works. Take a one-step audition, and once you achieve a 10% profit target, you receive a funded account, up to $1 million. You keep up to 90% of your profits, which you can withdraw anytime. There are only 2 simple trading rules: a daily loss limit of 5%, and a maximum trailing drawdown of 8% that locks in at your starting balance as your account grows. Tradable instruments include FX pairs, indices, stocks, metals, oil, cryptocurrencies. If you want to partner with a firm that has simple trading rules, incredible trader support, and has your best interests at heart, Surge Trader is the partner for you. Get started today at www.surgetrader.com.
Okay, so this is what we have, the Surge Trader. And then let's look at phase 2 really quick. It's a 2-minute video.
Bienvenidos.
Surge Trader's 2-phase plan is designed to maximize your trading success. There are no time limits or minimum trade requirements. You can pass the audition and get funded on your own time schedule. Phase 1 is the qualification phase, where traders advance upon achieving just an 8% profit target. Once you complete Phase 1, it's time to move on to Phase 2, called the validation phase. In this phase, your profit target is lowered to only 5%. Once you pass the validation phase, you'll receive credentials to a live account, funded with real capital, earning up to 90% of the profits you generate. For both phases and the funded account, there's a maximum fixed drawdown of 8% and a maximum daily loss of 5%. It's important to note that the drawdown is fixed and not a trailing drawdown. On a $100,000 account, for example, the drawdown stays fixed at $92,000, no matter how much profit you make, never trailing with your equity. Why choose a 2-phase plan? Number 1, with a fixed drawdown, traders have a bit more flexibility since the drawdown percentage always stays the same. Number 2, registration is extremely budget-friendly, starting at just $200. Number 3, traders can capitalize on market opportunities with 50-to-1 leverage on Forex, metals, commodities, and indices. In addition, the 2-phase program includes weekend trading and gives traders the opportunity to scale up at no additional cost. While traders can add on for a 90% profit split, the standard payout of 80% is an extremely competitive baseline. Once you're a funded trader, you can withdraw your profits on day 1 and every 30 days thereafter. Many traders just like you have secured funding, earned profit, and requested a withdrawal on their first day managing a funded account. Throughout your journey, you can take advantage of our world-class customer support, who are there to assist you 24 hours a day, 6 days a week. Surge Trader's two-phase plan offers a streamlined and progressive approach to trading success. Are you ready to embark on this exciting trading journey? Join us today and experience the profit potential for yourself. To get started, visit www.surgetrader.com.
So that's pretty cool because Surge Trader used to not have that part of it. That's something totally new with Surge Trader. So that's really cool. So one phase addition in which you achieve 10% profit target. That's what we're used to in our academy. All you got to do is go up 10% before you go down 5%, and then you're in a live account. And then they have a new thing called two phase, and that basically you're going to have to pass 2 tests. But it's pretty cool because it's like 8% you have to do instead of 10%. I would still some people don't understand the drawdown and stuff like that. So it might be easier for somebody. Well, I think it's easier to do the one phase for sure. But the two phase is something that's pretty cool. It's cheaper and it's pretty awesome. Yeah, allows you to learn more. In this phase, your profit target is lowered. You will have no time limits minimum. You will need to maintain consistent risk management. This is pretty cool. I like it. Choose your tier and take your Surge Trader edition. So it's really up to you which one you guys want to do. And it's actually cheaper. It's not that much cheaper for the phase 2. Yeah, it is. It really is cheaper. Let me see. Yeah, so on the 500,000 one, you're actually paying 2,300. So phase 1, you got to get a profit target of 8%. Phase 2, you just need 5%. So that's pretty cool. And this one, the one that we're used to, is profit target 10% one time, and then you're in the trading and everything. Phase 2, you have a max fixed drawdown of 8%. Well, almost everything's the same, but your leverage account is way bigger. It's 50%. So you can get, let's say luckier if you do this one. So I would choose phase 1. Why would I choose phase 1? Well, phase 1, once you get 10%, then once you make some more money, you could take it out. So let's go over $100,000 account. You go up 10%, and then you go up another, let's say 5%. That means you made $5,000, and then you could take up to 90%. So you could take, $5,000 or $4,500 you can make if you do that. The other one, you go up 8%. You're really gonna basically be going up. What is that? 13%. 13%. You would have already made $3,000 on the other account, and so you could choose which one you want. I like it that they have both these options. I might actually start buying a couple phase 2 accounts because you have way higher leverage. That's what I like about it. And the 8% is kind of easy. 10% is not that hard though. So beautiful. They've been around for 2 years. Really great school. Really great. This is SEC, accredited with the banks in America, and it's its own bank that it's underneath. So this is very good. It's not like just going on the internet and trying to find a prop account because it's cheaper. You don't know if you're going to get paid at the end of the day. And a lot of prop accounts, just the SEC shut them down and they can't even operate in the United States. So some of them might be operating still illegally, but this one is true. And it's owned by one of the richest women in the world, which is another thing. I love that, she's just very rich, and her whole thing was she wants people to use her money to get richer. And obviously she makes money. She makes 10% up to 25% on when you get paid out. She gets paid out too. And she also makes the money from the audition fees that people don't win. But she wants people to win, trust me. Like I want you to win. So that's the thing with the prop accounts. Let's go straight into, questions. And then I could set up an account and show you guys the difference from take profit or stop loss and how you could basically make money from that. I just unmuted everybody. You can go ahead and hit the mute button if you want to talk. Does anybody have any questions about what we went over so far?
Just one quick question on the phase one that I'm in right now. So it's 100,000, bring it up to 110. My understanding from the first video from Search Trader a long time that we watched a while back, I may have miswatched it, but was that you could bring it up to 110 and you could pull out as much as you wanted, but you can't go below 100,000. So obviously you have to leave a buffer in there. The way you just described it was a little bit different, leaving it at 110 and then anything above that taking. So does it always have to be at the 110% threshold for them, or that's just to qualify?
Okay, to qualify, you need to go up 10%. So once you go up 10%, that $10,000 on a $100,000 account, then they're gonna give you email, and you're gonna have to sign up so where they could start paying you and everything. And then you're gonna get a funded account. They're gonna give you a real account that's real money. If you lose $5,000, Search Trader loses $5,000. It's real money to them. So they don't want people just to get the funded account and then lose the money because they're losers at that point. So you go up, let's say you go up $5,000. Now you can't take their 100,000. That's their money, right? But anything after their 100,000, you could take. So let's say you go up, 1,500 or $105,000. You could take out that $5,000. Now, is that wise to do? No, because then you're gonna have to go and do it again. You're gonna have to get a funded account. But if you think about it, the account costs $700. If you ended up making $4,000, and they take their 25%, so what? Just go do it again. And you got how many chances to do it again? 700 goes into 4,000 how many times?
Many.
Right? Now, what I would do, I would make sure I always go up 10%. Again, now you have $10,000. Now take $5,000 out of that and keep 5,000 in there. Why? Because you could lose 5% wherever you're at. Even if you have 120,000 in the account, if you lose 5% of that, they're going to close that account and send you the rest of the money. So let's say you go up $120,000 account on a real account and you lose 5% of 120,000. They're going to shut the account off, and then they're going to send you like $13,000, whatever's left over from the 100,000, and they're split.
And the trailing drawdown portion is when it goes above 100,000, it automatically resets, if I recall, right? So the trailing part now becomes 105, I think, or 108, right? Like we're talking about.
So once you go up 5%, then it's gonna stop right there at 100,000. So if you go back down to 100,000 from 105,000, then you lose. If you go up anything higher than $105,000, like let's say you go up $107,000, you could lose all the way down to 100,000. That's what the drawing thing means. One thing about that you got to be careful on is the daily loss. You can't lose 5% in one day. So it doesn't matter where you're at. If you're at $109,000, if you lose 5% in one day, you're not going to get to the funded part. And if you're on the funded part, they're going to close the account down. So that's why if you have a bad day, like I always teach you, stop trading. You only want to lose up to 2% a day, and that's a lot. So that would be on a $100,000 account. You never want to lose more than 2,000. Once you lose 2,000 a day, it's like, bro, that's not your day. Don't start revenge trading and trying to get it back.
Revenge trading.
Yeah, no revenge trading. Good question, Patrick.
Okay, thank you.
Yep. Do you have any questions, Ricky?
No, I'm good on my end.
Okay, beautiful. All right. Does anybody have any questions? Yeah, I got some people that just joined. Let's just look at this account right here. This is this is like a $250,000 account. Just started it. and it's at 249. You can see. So you would want to set up, let's say we take a gold trade. Now, with an account at this size, 250,000, you shouldn't trade more than 2.5 lots a trade. Why? Because you could have a bigger stop loss and a bigger take profit. If you do 25 lots, you can lose this account real quick, or you can beat the account real quick. But the whole thing is, with a $100,000 account, you want to trade about a one lot. On a $250,000 account, you want to trade 2.5 lots at a time. It's just a better way to do things. So let's say that we can let's look at gold. Let me go to, we can look at gold real quick together. And I'm always going to be looking through TradingView. That's where we're going to be looking at the market. And you guys will get all this together. You guys will understand. Don't get overwhelmed. It's like being in algebra class and you don't know plus and subtract. Most of the people that are on this call did the plus and subtract. We went over how to push the button, and I'm going to have to do that with you guys, or you guys are going to have to watch some videos and things like that. So don't ever get overwhelmed and think, this is too hard for you, because some people already took the beginner stuff. And this is mostly for the people that took the beginner, and now we're going over some of the more advanced techniques right here. So let's just look at gold. This is gold right here. We can see it went down. Now it's back up. It's at 1938. And that's really fast. It went up today. Was anybody trading this today?
I did a little bit of it on the demo account.
Okay. Yeah, it just shot up. So it
About
went from like,
I had it from a spike about an hour ago.
yeah, it went from 1910 to 1939. So it went up about $29 today, which is magnificent. That's one day. So let's go and see what it's doing lately. It kind of bounced up. The bot had it going down right here. It did go down a little bit, and then it bounced back up. Let's see what else is going on. This is on the 5 minutes. I usually trade at the 15-minute candle. So let's see what we can see here. So the bot had it going up right here, and then it hit that major upswing right here. So yeah, we would have took that 15-minute trade right here. It was at 23, and now it was the highest it went to 41. We could have made crazy money on that 15-minute one right here. And so, on a 15-minute, I might set it $10 down, $10 down. And you see right here. So if I would have got it right here, it would have been 1924. The lowest it went was at 1919. So I'd have probably set it for $10 down, $10 up, and you would have rolled this out. It went down a little bit. You wouldn't have worried, and then it went back up. You would have made a lot of money from this. So that was magnificent that the bot called that out. Let's see if the bot called anything else out in the last 2 days on the 15th. Not really. So that was a great trade. Could have made people thousands and thousands of dollars. How much, depending on, even if you would have put in one lot right here when it called it at 1924, and it went all the way up to 42. So you would have made at least $2,000 on a trade at one lot. If you were in 2 lots, it would have been $4,000. If you were at 10 lots, you would have made $20,000. You see?
Yeah.
10 lots would have had you just win any account, basically. Sometimes we're trading 22 lots or 7 lots most of the time. So 7 lots on here, you would have made $14,000 on this trade alone, just listening to the bot. So what I would have did is I would have set up this trade, and I would have gone in. Let's go to the trade. And the reason why I want to look at that is, where is it going now? So where should we trade this now? I like it. It looks like it's in a super uptrend. It's trying to go down and hit this blue, which is 36. So, and it's trying to dump down right here. Let's see on a different time frame. Oh, right here on the hour though. Look like it's still going up on the hour. It did kind of bounce down. I like this steady going up. Even though it's saying it's gonna curl down. Looks like it wants to get back. And I was trying to tell people, like right here, this is a half an hour on the bot. Look at where it told us. At 1919, it told us to go up, and it went up ever since then. So we could have made a lot of money just looking at the 30-minute and the 15-minute of the bot telling us what to do. So that's beautiful. So I like it still going up. So I'm going to make a trade going up. It's not the best scenario on the bounce to go up or anything like that. It actually will be better for us to trade right now for it to go down. But since it already kind of went down from here, it went down $3 already. And it might keep on coming down. It's very high up here, MFI, but I feel like it's going to turn around. And, you know, Tokyo just started trading. That's why this big up right here happened. Tokyo, the Asian market came intact and it went up really fast. And you'll see tonight at around 3 o'clock Eastern time or 12 o'clock Pacific Standard Time, you'll see again, it's either going to go up real fast or down real fast. It does it every day. And then you'll see it in the morning at 9 a.m. You know, Eastern time, or at 6 a.m. our time, Pacific time. It's going to do some volatility, a big up or down. It's going to happen 3 times a day, every day. That's just, you know, the market, because major things start coming. And sometimes one major thing will push it up, and maybe tonight, you know, Europe will push it down. But it just so happens like these last couple of days that it's been getting pushed up and up and up. Like right here, it got pushed up big time.
So what's a good stop loss for this if we take a position right where it is right now at 1938?
So if I'm looking at the 15 or 30 minutes and I'm doing, you know, 2.5 lots on this account right here, I like it going up. So I'm going to go gold. XAU USD. Click it in, and I'm going to go $10 down and $10 up. See, they're telling me the normal volume is going to be 10. I'm not going to do the normal volume that they're recommending. I'm going to do 2.5, because now I could do a 10-point stop loss, and I'm only going to lose, you know, what is that? About 2,500. So I'm really 2,500 on a $250,000 account isn't that bad. So now we're at 1938. So I'm just gonna go 1928. Okay, for the stop loss. Now for the take profit, I'm gonna go $10 up on 1938, which is 1948. Okay. And so, and then I just buy it, right? The other thing I could do is I could say, well, I think it's gonna go down further, and I could mess around with pending orders. And you know, I might do that because it does say it's going to go down. So let me go ahead and do a pending order right now. So my pending order, I want it to buy right at a certain level once it hits. So where do I want the price to be? I want the price to be at 19. It's at 1938. I'm going to say about 1936. Okay. I'm gonna buy. So once it goes down to this price right here, it's gonna trigger a buy. And then I want the stop loss to be $10 under that. So 1926. And my take profit is gonna be 1946. So it's very easy when you got $10. Okay. And the volume is set at 30. See, I could have set that, and I could have been real happy if it did do it. I could have been real sad if it didn't. So I'm going to make sure that the volume is 2.5, like I was telling everybody. And then I'm going to place the order. And when it does that, when this comes down here, then it's going to take the order. So some people will say, well, Beast Trader, why don't you take it going down since you know it's going to go down? Well, I don't actually know it's going to go down. And I'm only a one-way trader. So I don't want to take it down and then try to get in up here to go up, because what I believe is going to go up. But what the indicators are saying is it's going to go down first before it goes up, right?
right?
But I don't
And
want
if
to
it
trade
doesn't,
all night. I'm trading down,
so,
trading up.
so
Sometimes I
if
do
it
that,
doesn't,
like in the morning when I was catching the flight, I was trading going down and up. And I love to do that when it's very consolidated. But right now, this market is not consolidated. It looks consolidated right here, though, right? Oh, this is Bitcoin. Sorry. This map is Bitcoin. So let's go back because Bitcoin is very consolidated right now. But you see right here, this thing is moving what? Up, right? And then back here, it moved up again. So today it's been moving up. Monday is when it started moving up. Monday, you see on the bottom, it tells you what day it is. So it says Monday the 16th at 7:30. It started 7:30 at night. It started moving up, right? Moving up, up, up.
each quick question. If it doesn't
Yes.
go down, it's
Huh?
not going to place that. If it doesn't go down, it's not going to place that trade, right?
Yeah, if it doesn't go down, it won't place the trade. Yep. And so
And if you
that's a
cancel the
trade.
trade,
That's a trade I don't want to monitor. That's a trade like I wake up in the morning, I won or I lost the trade. That's it, right?
gotcha.
Trades that I'll do fast. Like you see how it's going down because everything's saying it's going down, right? We could have made a little bit of money right here. It's probably still going to go down. So we could take a trade right now to go down just because of, time's sake with you guys. We could just say, look how fast it went down right here. We could just say, okay, we're going to take it going down. We're going to sit right here. And you see right here, it's $20 off. We're negative $47. Now it's up $20. It's up $100. Now it got in the other trade. You see that?
I did. Yeah, I see that.
So we want to get out of this trade immediately because
Which
we feel
one?
like it's going to go back up. So I was trying to get out of this trade at like
Oh, yeah,
this
yeah.
$30 would have been cool. Because
Well,
I
you're
thought it
making
would
money
hit that
already.
and then start going up. So let's get out of this, X this out once it goes into profit. But do you see where it got in that trade and now it's immediately in profit? The one that I told you guys about, the penny
Yeah.
trade. Yeah.
Yeah. I only did.
So I
I only
want
did a
this to
quarter.
I just want to get out of that trade. You see how I got out of that trade
Yeah.
really quick,
Just cancel it.
right?
Just cancel it. That little extra.
And so
yeah.
now I'm out of that trade. So what did I do? I just made like $125 real quick with you guys on the call, and I got in, got out.
That
Right?
little X button. I didn't realize that was over. That's nice. I like that.
Yeah, hit the X button, but you get the first time you hit the X button on the account, they're gonna ask you, are you sure you want this to happen when you do this?
Right.
So let's see what just happened in slow motion. I made about $150 in like what, 10 seconds?
Yep.
I just
Right?
made $250 in 10 seconds.
Yeah. So I
I got
took
a
it
quarter.
down and I had to get out of it going down because I had the other one for it to go back up. So right now, this trade is probably might go down to this blue line right here. It might go down like a 32. So I don't want to stay in that trade and move too fast for me. So I want to get out immediately. But probably, about 33 is probably going to shoot back up. I'm just happy that I got in and got out of the trade. I can see right here on 5 minutes, it should be shooting back up. This isn't really the best time to trade this for a longer amount of time. Like that one trade. I could have stayed in it, right? It could have kept on going up. We'll probably see in the morning. It's probably going to shoot up to maybe like 1950. But I want to get in when it gets lower. That happened too fast. I
just made $10 real money.
Yep, $10 real money. Yep, there you go.
There we go.
So you get in. It's easier to make money like in this area right here. I think this is where I was earlier in the day. It was just going up a little bit, down a little bit, and I was able to make money because even if you go for it to go up, like right here, you see that it started going up. Even if you had it to go down and you were at the top, then you could have got out up here. So in consolidation, it's easy to make money in like 20 to 30 minutes because it started consolidating right here. So you had about, an hour of this time to where it's going to either go up or down and make you a little bit of money. Now, you're not going to make a lot of money in consolidation, but you don't want to be in consolidation, trading to go down and then it pop up on you like that. And you're like, oh my gosh, that's when you're going to take a little bit of a $200 loss or something. You might be trying to make $100 each trade. You might win about 6 or 7 of them. and then it goes the wrong way and you lose, $200. It's okay.
If you're trading less than one lot, is plus $10 and minus $10 excessive? So like a quarter, if you're
Yeah,
trading
yeah.
like a
$10
quarter or half
is
a
great.
lot.
Anything is 1%, like if it's $100,000 account, you're doing one lot. I call it the 1% rule, right? So the lot, if I'm at 250,000, I'm doing 2.5 lots. That's okay. $100,000 account, I'm doing one lot or less. Then you could
Right.
do the $10 up or down. But if you're like in $100,000 account, you're doing like 3 or 4. Don't do $10. That's too much. You're trying to hit really quick if you have too many lots.
No,
If you got
I'm
7 lots on $100,000 account, that means if it goes up $1, you made $700. If it goes down $1, you lost $700. The
Right.
most you want to lose on $100,000 account a day is $2,000, and you got to quit.
Right. Right. Yeah, I'm trying to break myself in that I did a tenth of a penny, and then 10 cents for the last week or so. So I'm starting to open up a little bit more, but I'm just trying to be conservative. I'd like to get this thing funded pretty soon. So, what about as far as gold and consolidation? $10 plus or minus stop loss probably isn't going to work in that scenario because of consolidation. You're
I don't
looking
know.
for
In consolidation, you're doing $2 up down.
right. Yeah, $2 up down.
But you're really only trying to make $1. So you're trying to make $100, and if it goes the wrong way, you only want to lose $200.
Right.
Because you know that with the strategy that you have and the risk reward that I'm teaching you, that you're going to win more than lose.
Right.
So a strategy like that, you have to win 10 or 6 trades out of 10, 60%, and then you win money, right? Because look, 6 times 100 is $600. Now, well, you're still losing. If you lose $200 4 times, that's $800. See, so you're losing 200. So you actually got to be a 70% trader to make money off of that. That means you make $700, you lose 600. So in consolidation, you should dang near, I try to at least be 80 to 90% on consolidation, because you have a stop loss that usually is not going to hit because it's not moving that much. And you're just getting a little 100 whenever it comes back up. You're getting back in the trade, going the other, like right now, you're not in consolidation. These are two, it looks like it's consolidated, but you're talking about, 1938 and it hit 1943. So you're talking about $5 difference from here to here. That's not consolidation. Consolidation is like right here where it's like 41's the top and 40, 41.50 is the top and 40 or 39.90 is the bottom. That's consolidation when it's like $1 to $2 difference.
You said you like trading US 30, correct?
Yeah, US 30 is my favorite.
I noticed in the morning about 6:30 it explodes either up or down, typically up.
Every day.
Other than trending, events and meetings for economic stuff, the chairman of Fed, how do you determine pretty reliably which way it's going to go every morning? Do you expect it to bounce up just because the market rallies?
No. So let's look. So today at 6:30, it bounced up. Mm-hmm. Well, it bounced down first, right? 6 o'clock. This is 9 o'clock their time. So first it bounced way down, and then it started going way up, right? And then you look at yesterday. Let's look at yesterday. And 6 o'clock right here. So this is the 8:30 mark. It kind of went up, and it kind of did go up in a way. So this is just because of where the market's at. Like right here, this is like New York or London time. It went straight up. So you got to be careful. It's not going to always, just like gold, right? Gold went down for like 2 weeks when you first got in. Now you've seen gold go up for like almost 2 weeks now. So it's not always calculated like that. Like I could tell that gold was gonna go up because it was so low, and I've been trading gold so long, and it didn't make sense for it to really do what it did. Like let's look at the day of gold, right? So, 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 days it's been going up. And then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So 12 days it was going down. And so you can see that gold is the easiest thing to trade, right? Because what it does is it goes down and it goes back up. So if you have a big enough stop loss and a low enough lot size, you could kind of weather the storm. You could have got in, like right here, you could have got in for it to go up, right? And if you had a low enough stop loss, this is only like you would have lost like 3,000 down here. You could have stayed in. And then all of a sudden, look what happened. Now you're up in profit up here. But you don't want to have too many lots and not enough stop loss both ways, because it's not going to get you back into, you could have got in right here. Oh, it's going to go back up, right? And it goes down, but then now you're big time in the money right here.
I
So
see.
you gotta be careful. Like right here, the bot calls is going down. Now somebody said, well, yes, it went down for a whole day. It went all the way down here. So the bot called it right here at 1963. It went down to 46. That's 20-point drop in one day. But somebody will say, well, the bot didn't catch it because it went up. Yeah, you could have got out down here at $20, which, if you only did one lot, you would have made $2,000.
It's a good day.
Or if you did 10 lots, that's $20,000. But let's say you got in right here at 63. It goes all the way up to the top at 87. So you could have had, let's say, a $30 one, because this is on the day, right? $30 stop loss. And now you're in the money down here. You see, it started going down. Like the bot knew that it was going to go down. Now it did go up a little bit on this day one more time, but then you would have been so much in the money over here if you could have weathered the storm at 1963, and it went down to 1886. So it went down 80 points. 80 points at, one lot is $8,000 you would have made down here. 2 lots, you would have made 16. And so 80,000 if you would have put 10 lots on here. But with gold, if you're going to be a day trader, you got to have the stop loss be high, and you got to have the take profit be really high. You're not just sitting in a trade trying to make $100 on going off of the day trades.
What's the top of that candle, that one? How much did it actually bounce up just a little bit before it rolled down? So if you were set the stop loss and you were trading,
so this would have been 86. It told you at 63. So if you wouldn't have took all this money down here, $2,000, you would have been up here. You would have been, that's about 20 in the wrong direction. So you would have probably had your stop loss at like 25, maybe 30, something, big, because now we're trading what? The day. What I'm telling you is 10 on the 15-minute candles. So if you're trading on the 15-minute candles, it needs to be 10. So you go right here. This is 24. If you're not out up here at 25, you start seeing it going back down. Down here is 19. So you got in at 24. Yes, it did go up, but you stayed in because you want big money. So this is a 15. So you're out 10, right? $10 stop loss. So 19, 24. You look all the way to the right. That shows you, what it is right here. This little thing right here shows you, right? So it's 1924. It goes down here. You're at 1919. So that's $5. But your stop loss on a $15 candle is 10. So 10 is way down here. It hit 5. You're not worried. And then what happens? It goes crazy up. So you could have beat the test on a trade like that at 24, and you got out, at 42. So that's why you have to know, like, during the candles on a 5-minute candle, you're probably doing $3 to $5 stop losses. You're not going to be in stop losses that are really, really long on 5 minutes. That's not what you're trying to do.
I see.
Let's just say like this one right here. You get in at 22, You know, you're at $5 down, which it would be 17. It never hits 17. It goes up. You start seeing it flaking right here. It goes up, up. You're out right here, 26. You got in at 22. So you made about, you know, $400, $500, and you're out with one lot on that situation. So, and then if you want to trade in the morning, you know, that's when the things start moving radically. Does anybody have a question? You guys ask some good questions right now because it's very important to know.
I like this. This is good. I appreciate it.
I like this. Yeah, it's working.
Yeah, no problem.
This is
Here
the
goes
mechanics
gold right
of all
at
of it.
5:30. At 5:30. See, this is 5:30 in the morning. It goes down, opening of New York, goes down real quick, and then shoots back up. So sometimes in the morning, whichever way it starts going, you could wait until whatever way it goes, and it'll pop outside the Bollinger Band. Then you just take it back the other way, and you know that's more of an advanced way to trade. You don't have to find out which way it's gonna go in the beginning because that's almost impossible unless there's a news event and you could really tap into what's going to happen. You know, you wait for the second part. So this is 5:30. It shoots down, and then as soon as you see it stop moving, then you say to buy, and then you probably get out like right around here. You don't even wait for all this to happen because the next candle is when you want to get out. Even though it's not as much as this one, you're going to make some money on that one, and you'll see this happen every day. So let's go to 5:30 again. And here goes. So that's the 5:30. Let's look at the next 5:30. And also England's time too is very, very, very good. I love England's time. Let's switch it to this is 5 minutes. That's why I was taking so long. So let's look at okay, so here's 5 o'clock right here. We see it just go down, down. But what you don't see is this is a whole hour candle. So it goes down to here, and then what happened? It goes here and it comes right back up. You see? So you could have got it at the end of this candle when it went down the furthest and got it back and then got out. Now, you don't want to catch it going up, 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 up and away thinking it's going to keep on going up. No, you get out. Once it stalls right here, you get out because what's going to happen is probably going to go in that same direction. Let's look at 5:30 in the day before. So it was right here. So what happens is it transfers over right here. It goes up. Nope, it goes down first, all the way down here. And then what happens? It shoots back up, all the way up here. And then it goes down, and then it starts consolidating, going up, up, up. So the same thing you could have got in. It went all the way down here. And then when it stopped going down on that hour, you could have went the other way. Boom. And then it rolls up really fast. So you could do that if you have a $10 stop loss and take profit, you could do that, but you got to catch it when it gets to the bottom of that first half an hour of the trade. That's the only way to really catch that. And that's more of like an advanced technique if you just want to take money out the market all the time. Like here it goes right here, this on a Monday. What does it do? It goes down for this hour, and then it pops right back up. So you could have got it down here. It's not a major movement, but you could have bought down here, and then look. You could have stayed in this and made all kind of crazy money if you wanted to.
I have a question for you. So let's say you're trading first thing in the morning and you want to do that strategy every single day, because that's what I wanted to. I wanted to get up early and do that. How do I protect myself? Do I push one trade up, one trade down with stop losses appropriately with the similar amounts, and then hop out of one of them right away if the market starts going the wrong direction or the direction I thought? Obviously, get rid of the backup, whatever you want to call it. You know what I'm trying to say. So push one up, one down.
If you want to do up and down like that, then you're gonna have to have real low lot. Let's say like on $100,000 account, you're probably at like 0.5. And you might have like $20 stop loss and take profit, and you might get out at like $10. If it goes $10 in your right way, you get out of that trade. You're still in the other trade and it's still going the wrong way. Hopefully that trade goes back down. You might get out of that trade when it goes back down like $5 when you're negative, still $5. Now you made positive $5 on that. You're probably not going to be able to stay in and try to really make profit off of both those trades. That's kind of hard to do.
No, what I was thinking is if I was watching it though in real time within the first couple of minutes, if it starts to really go up, then I obviously know to cancel out the other trade as fast as possible. So that
Yeah.
was my quick strategy.
Yeah,
at
we
least.
do that all the time. What you want to do is, so if you're that's news trading, right? So
Mm-hmm.
let's go over that scenario. So we could do that. Let's go to Forex Factory.
Because
And
the
you
Dow
would,
Jones
that's not
blows up
like,
every day.
yeah, but that it's not going to go up enough every day. It's only doing that on the days that there's something crazy in the news. Like today,
The
there was
war,
a
and
retail
everything.
sales, core retail sales. So at 5:30 in the morning, our time, it did something crazy because of this right here. But that's not the average day. So like if we look tomorrow, there is no red event during the opening of the market. So nothing, it's gonna do a little bit, but it's not gonna do a lot. So what
Gotcha.
you're looking for is these red events at 5:30. So
Yeah.
unemployment claims. This on Thursday is gonna be big. So you could
Mhm.
do your strategy. What you do is you do your strategy both ways, right? But you have a stop loss that's like $1. $1 the wrong way will
Got
get
it.
you out of the trade, right? But it might go up $10 the right way. So you're out at $1 real quick, and the other one's hitting for you going the other way. The only thing is sometimes that stop loss won't catch quick enough because it moved too fast. So you got to be careful on the news trading, and it will tell you on Surge Trader, like if you're going to trade against these news events, sometimes your stuff won't catch as fast as you want it to.
Okay.
Yeah, just to be honest.
Okay.
So it would be better for you just to pick away and have one stop loss and come back the next way. Or what some people do is, this is something that I was teaching, like you have two accounts, you take one going one way, one going the other way, and then you have the stop loss a little bit bigger. Maybe you got the stop loss for $3 to lose and $3 to lose the other way, and it'll probably catch about that time, and the one that hits the right way, you could really beat the account that day. So you would do that for like higher leverage. You wouldn't do it on a $100,000 account. You'll probably do like 7 or 8 lots, because once it goes the right way, then you beat the account. And the other account, when it goes the wrong way, you're going to lose like $2,000 of the account, and you might got another time to do it, or it might just cancel you out and you might lose that account. But that's a way if you really need some quick money. I was teaching people how you could get 4 accounts like that, depending on how much you have. 2 up, 2 down. 2 of them are going to win on a big news event like on Thursday. 2 of them are going to win the whole challenge. Now you got 2 of them that won, and you take those 2, you go up and down the next week on the unemployment. And one's going to win some money for you, the other one you're probably going to lose. And now you made like $5,000-$6,000, $7,000, sometimes $10,000 on a $100,000 account, and you bought $400,000 accounts for $700. You basically spent $2,800 and you made $10,000. So there's stuff like that you could do that I taught, and that was a little bit more advanced. That's like a news training, masterminding class that I was teaching.
Right. I remember that with talking to Doc about that last winter.
So we could take it anyways. The way that I really want to teach everybody how to trade is just slow and easy, grind it out, make money long term. Some people need to make money right now. They got the investment capital to start making money right away. We could do the news trading, which I could teach you all that. But the way that you're going to really be successful is for you to treat an account like it's your baby and build it up, 1% a day, 2% at the most, and stop. If you make 2% a day, you stop the account. What does that mean? That means that my goal is to make $1,000 a day on my account, $100,000 account. If I really reach a crazy goal, I make $2,000 and I have to stop trading at $2,000 in a day. And then the next day I come out and I try to make 1,000 again, but what am I going to lose? I could lose 1,000 or I could lose 2,000 in a day. So I'm basically trying to win more 1% a day. If you win 1% a day on your account, I know in 2 weeks, because you're trading 5 days out the week, 1% in 2 weeks, you make $10,000. You beat the challenge on any of them. If you make 1% a day, right? Now, after 2 weeks, then you have the same strategy to make 1% a day. 2 weeks after that, that's a month, and you just made $10,000 off a $100,000 account. If you have a $250,000 account, that means in a month you made $25,000. If you got $1 million account, that means you made $1 million in a month. You see, so it's easier to make 1% a day than to try to win the whole thing in one day. That's like a get rich quick scheme, and I'm not really into that, you know?
Me neither. No, I appreciate the tips on the up and down.
Yeah. Does anybody have any questions?
No, I don't. I'm actually just soaking everything in. Soaking in
Right
as much
on.
as I can here.
Yeah, so some people that's been trading me for a long time, they just need the risk reward. They need to know the lots, you know, and there's a video on how many lots to do and stuff like that you could do.
Your bounce strategy from we used to do binaries is spot on, because last Sunday I was just mock trading with like a penny with Bitcoin. You probably saw, I think it was 7 or 8 o'clock at night, Bitcoin jumped up, I think $70 or $80 just within like 3 seconds, just like that. So on the mock account, I closed it out. I profited $1,000 just like that, or whatever it was on the mock account. On the real account, there was no active trade, if I recall. So, but that was an interesting one, because if I was smart and remembered your bounce strategy, which I was so tired I didn't, I would have taken it right there, because the next morning it had corrected all the way back down to where it was. I don't know what happened right then. Maybe some investor bought a huge chunk or something, but what goes up has to come down, right? So
Yeah, that's the London. So the most important trading times, let's go over that with you guys. So the most important times trading around the world, the number one is going to be the New York. When New York opens up at 9:30, you know, which is actually, it's really at like 8:30. And then you got the Shanghai when they come into existence, they come in about 7. This isn't a good clock. Let's go to something that tells us a little something. You can research this yourselves too. But let's see. Here we go. See what they say. So 9 a.m.
Shanghai.
That's Eastern time. And then Europe, and they're talking about their time frame. That's 12 o'clock our time, Pacific Standard Time, or 3 o'clock New York time is when Europe opens up.
okay.
And then Asia is like our time that I'm always training, like 7 to 8 o'clock. It is the best time to trade. This is the stock market. Let's go to a Forex one. And then I wish they would give us Pacific Standard Time. But this is kind of like how it looks. And so these are the times that I'm going to trade. So Eastern time. 8 a.m. So it starts getting busy about 5 o'clock, you know, Pacific Standard Time. And then when the big thing drops is about 5:30 or 8:30, right? It's like we know that everybody goes to work about 9 o'clock. And then Tokyo. So Tokyo is going to happen. It says at 7 p.m., which it seems like 7 p.m. our time is when it really starts going nuts. And then we have London time, which is 3 a.m., which is right, but that would be 12 p.m. Or 12 midnight Pacific Standard Time. Our East Coast time is 3 a.m.
Right.
So those are the times, you know, Sydney, don't worry about this because there's not a lot of money that's going to hit the market during that time. So this is how it kind of overlaps on the universal time chart right here. What we really want to focus on is the Tokyo session, which is when Asia rocking and rolling. That starts about 7 o'clock p.m. West Coast time. I feel.
So that spike might have been London coming online at about 11 p.m. the other day.
The big spike is always every day. It's going to be at this 8:30 East Coast time or 5:30 Pacific Standard Time. That's the biggest spike ever. and it's gonna last till for about 2 to 3 hours till
Right.
the West Coast wakes up. It's gonna last till that time, and it's gonna be major movement. And then you're gonna have London coming in at 12 midnight Pacific Standard Time. It's gonna be about 3-4 hours of them major movements. And then this is like hit or miss. Tokyo's like hit or miss because even though they have the most money in their banks, I feel like they're trading off of Europe and American stuff. Like nobody trades Chinese. We can't even trade it. It's not even on our stuff, right? The China, whatever it's called, versus the US dollar, it's not traded. So even the Asian people are trading the European stuff or the American stuff. Yep. That was good. That was good.
Yeah, it was.
So that's always good to know. I'm gonna trade either early in the morning or late at night. I used to trade all the time at late at night, but since my woman, she's real early, gets up and like, why are you still asleep? I'm like, because you were asleep at night and I was awake. But so depends on what you want to do. I feel like the London time is way easier to trade than the morning. The morning, when New York comes, brother, it's like probably 90% of all traders are trading at that time. And then when London comes on, it's probably about 60% of the people try to hop on that time because man, it's so crazy in the morning. Sometimes you get caught.
I can see why you like US 30 though. It's explosive in the morning. It's pretty volatile, seems like. So if you know what you're doing, you can make some good money there.
Yeah, and then you can get US 30 if it's going in the right way and you got it, you're doing real good. It's not gonna come back so quick. It's not like gold to where it's just gonna come right back to where it was. Like gold, you can see it goes up, down, up, down, up, down. It does this all day. But US 30, it's like, man, it's gonna go extremely up.
It's more event driven.
Yeah, big. Boom, boom.
I can't even get US 30 on the demo account here.
Nah, you can't get on demo.
Nah.
I was watching some joker on YouTube said he makes $40,000 a day on US 30. I believe he does. I no doubt he does. But it's just knowing what you're doing after a while, and the amount of lots, getting comfortable with it, and having a big enough account that you're not risking way too much. But I think it can happen.
Yeah, and gold and Bitcoin aren't an economy, bro. This is Forex. Gold is kind of not really that much Forex, and Bitcoin is driven by people just buying and selling. Like the US 30 is like the top 30 stocks in America versus the United States. It's like, you know what I'm saying? It's like
America versus whatever.
Versus the biggest stocks. It's kind of crazy.
Yeah, America versus whoever.
Like right here, it told us to go up right here, the bot did. And it went way up. So usually the bot, like the bounce strategy on US 30 is so on point. More on point than anything else, I feel like.
With the
even on gold. Like gold is really good too, but it's really super on point. And I don't know why. This doesn't even have all my indicators on it.
Do you ever trade on the Bollinger Bands with the US 30?
No.
Like when it pops way up? No.
No, I don't trade on the Bollinger Band. I don't know why all my stuff is missing on here too. That's funny. Oh, it's down here. Look how all this stuff fell down here. What is that? Let me see if I can reset this. I've never seen that before. That is so weird. It moved down here to the half of my stuff is right here. I'm gonna have to figure that out later. Probably if I just exit out and exit back in, but see, there's no Bollinger Band. It's like down here on the MACD. So the reason why I don't trade just the Bollinger Band is because I know the indicators. The Bollinger Band is I traded on gold. I trade the Bollinger Band on gold, but I wouldn't trade it on US 30 because US 30 is either gonna go up or down, and you can't just go both ways with US 30. You're gonna lose a lot of money. You gotta know which way it's gonna really go. Yep, good question.
I like those two though. The gold and the US 30 are definitely. Would you say it's probably advantageous to get very familiar with one or two or three, and just stick to that in the beginning for me? Just a couple of indices, just to keep it simple, but learn them cold so I know the times and
Yeah,
where to
that's
test
kind
Yeah,
of
them
what I'm
on.
right
doing with
now, if I
gold.
was a new trader, I would only trade gold because gold is very forgiving. After I learn how to trade gold and I feel successful, I would probably go into Euro USD and get successful at that. US 30 is more of an advanced trade. Stocks are advanced trades. Another like forgiving trade is the NDQ, the 100 companies and the 500 companies. They're kind of easier than the 30s. But USD, JPY, Euro JPY, these are more forgiving. They're major economies, and it's not just gonna go one way really fast. Like the US 30 will just go wherever it wants to go. Like
Right.
Bitcoin will just go up $1,000 or $2,000 out of nowhere.
I
And you can
noticed
get
that.
really in
Yeah.
trouble with that. So the
Yeah,
ones that I would
definitely.
avoid in the beginning is Bitcoin is probably the one that I would avoid trading in the beginning, and then US 30 would be my second one to avoid. And and then probably everything else is kind of like fair game to trade because a lot of those stuff are forgiving. Bitcoin is gonna go one way or the other way, bro. And if you ain't got the right way and you don't put your stop
Yeah.
loss on right, you could lose a whole lot of money on US 30 and Bitcoin.
Yep.
I got a
But gold
gold.
too. Like if you started trading gold, like some of you guys been trading for like 3 weeks, bro. Gold looks like the most unforgiving thing because it went from like 1950 down to like 1800, and now it's
I
back to
know.
1936. That's craziness.
It is
Like it has
crazy.
never did that in the history of me trading gold. I've never seen nothing like that.
$100, and that's a lot. For
Yeah,
gold to
usually
fluctuate.
like moves at the most like $10 in a day, right? It
Yep.
usually only move like $3 to $5 a day, and it will go up and down. But now, man, it's been doing some weird stuff. I don't even understand. I was just knowing that when it was so low, I was like, I know it's gonna go up, And I even got in trouble like when it started going down really fast about 3 weeks ago. I was losing because I kept on kept on wanting it to go back up, and a lot of traders were losing. I was seeing, a lot of people were telling me they were losing because they kept on thinking it was going up, and it went down like so low to where we would have never believed it would be that low. But once it
Right.
went down that low, all the
Grab it.
traders were happy because they were like, they knew it was going to go back up. Like, there's no way
Yeah.
gold could stay that low.
Right.
But now it's
So
like
now
at a
we're
point where this is like what gold should really cost right now. Like this is the real value of gold, about 1930, 1920 to about 1950 is what gold should really be at right now. So if it goes over 50, you got to be careful. If it goes under 20, you got to be careful. But right now, if it could just stay at like between 50 and 20, we can make a lot of money.
more predictable.
Yep. I
Interesting.
stayed after a little half an hour. I'm gonna make this video available for you guys. Does anybody have any last questions?
I got one question. This is just real quick. Looking at the chart, looking at the Forex chart, how exactly do you count pips? And pips are 0.10, right?
Well, pips are any denomination. So let's say on gold, 1 pip is equal to a penny. So right now it's at 85, it's at 88. So 1 pip would be 1 penny of this.
Okay.
So
Where
if you have
exactly?
if you have one lot and you're making $1, that's what one lot means. It means that for every pip you're making $1. So if every time 1 cent goes up, you're gonna make $1. So if it goes up a whole dollar right here, and every cent is worth $1, you're making $100, right?
Uh-huh.
Yeah. So that's how you look at it with gold. That's why gold is a little easier to calculate than the US 30 and everything like that. But it's very
Yeah.
simple on gold because 1 lot is worth 1 cent. So 10 lots are worth, $10 for
$10.
every 1 penny.
I can see why you said stay off the US 30 because it's 33,944. What does that convert to for a lot for US 30? What would that end up be approximately? Ballpark.
You gotta look at it because it's not like,
It's different, huh?
yeah, it's probably like $1 or like might be $3. Might $3 might equal, the
Because it's
one.
30,000. Yeah, because of 30,000 is a 3x or almost a 4x on that 3.4.
Yeah.
I see why. Okay, I got you. So
Yeah.
I'll stay away from it then. But it was exciting to watch it in the morning. It's still volatile. You must
Yeah,
make a
but
lot of
look
money on
what
that
it
one.
does though. So it's showing you like what you're calculating. Like even on like the Euro USD, you see the last digit is the pip.
Hmm.
So if it goes up, to 6 right here, then that's $100 on 1 pip on this one. So on this one it's 1 penny. This one it's all the way 4 numbers back from the dollar,
Right.
right? 2 back from the penny. So, and then you look at Bitcoin, same thing as saying right here at the dollar mark, that's where the pip is, like $2 or $3. So just be careful. Like always start out low pips and see what it does and then measure it from there.
Right.
This was a little bit more advanced class, so don't get discouraged if you guys didn't know what I was talking about most of the time. Because you'll be able to watch videos and I'll be able to teach you more of the basics. But this is for people that really want to start making money and they need to know they have to start doing stop losses and they got to start doing take profits and they got to know like their win percentage. That's why I tell you to write down your win percentage, or you can look at your history and it will tell you your win percentage. You could say how many you won, how many you lost, So don't
I
get
appreciate.
discouraged. Don't think that you need to know more. Don't think that Pat's been trading with me for like years. So, don't worry about that Pat's asking questions and it making you get to where you feel like you don't know anything because Pat knows some stuff because he's been
No,
trading for a long time.
not enough though. I appreciate the insight speech and the clarification on the stop losses because binaries are completely different. And even though you can win a long trade with forex only if you have a stop loss in the right spot, otherwise it'll spike and then my trade's gone. It happened to me many times, just on a penny or two, but still, it's frustrating because you get a good trade going and all of a sudden it spikes up for a second. You look away, and it's too late, it's gone. It's like that's a stop loss too low or too tight.
Yep, protect your money. Put the right stop loss in. Start doing your stop loss. If you're under $1, start doing it. If you're at a lot of like 0.5 or 0.1, do a $10 stop loss. If you're at 1.0, maybe you do a $2 to $3 stop loss on gold.
Okay.
Don't lose too much.
Lose
about $200 to $300 a trade if it goes the wrong way. Win $100, $200 a trade if it goes the right way. Start doing that a while, and when you win enough trades, then you'll start feeling good.
Right.
Do you recommend putting in the exit take profits on every trade just so you don't have to sit there and watch them? Just put the take profit margin in there every time.
Yeah. Yeah, that's the easier way to trade. You put the stop loss in, you put the take profit, and you go sleep and wake up, and boom, you feel good.
Yeah, gotcha.
Sometimes looking at the trade too much, man, gives me a headache.
I agree.
Look at this. 24 minutes ago, gold jumps 1% as Middle East conflict intensifies. See, stuff like that. You got to read the news to even know that it jumped like that because of that. You see?
Mm-hmm.
Like right here, this just happened. They said this just happened right here because of the Middle East conflict. Now, why? I would like to read that report when we get off and find out like why does that conflict when it's already been going on, but something, maybe they said the ground troops were coming in. So people said, oh, I need to buy gold. Somebody was just telling me the end of the world's happening because of this and that and the other and all this and that. And so people get real scared. They start buying gold. But I'm like, at the end of the world's happening, why buy gold? Like, you need to just save your soul and help other people.
I do have one more question that'll hopefully help the whole class. Is there a quick trick to studying and learning the buy limit, the sell limit, the buy stop, the sell stop, the buy stop limit, et cetera, et cetera? Do you find there's your brain just clicks so you always know? Because when you do the pending orders, obviously you want to do the right one of those here. Really unhappy.
Yeah, there's a
aside from just
video that I
studying.
made on that. You can just
I
look in the
watched.
back office.
I watched it. No, I watched it a few times, but it's my brain.
Okay, and
It's
then
hard
Lee
for me to
did one
train
too.
my.
Look for the one that Lee did.
Okay. Yeah.
Yep.
It's hard for me to train that. I'm gonna have to keep training that.
Yep. And then I'll make a new one. If we need more of that, I'll make a new one if that one's not working out. Love you guys. God bless everybody. Hope you guys learned a lot. And I did make a video of this and I will be sharing. All right.
Thanks,
All
Lonnie.
right, thanks a
Appreciate it
lot.
very much.
Thanks a lot, Lonnie.
All right now.
All right,
God bless.
Pastor.
Uh-huh.